Hello and good morning. Welcome to the Business Standard Morning Show. I'm Debargi Sanyal. It's the 5th of September 2023 and here are the questions we'll be answering today. Is softness in tax collection a cause for worry? How can India fix its air pollution woes? Should you avoid OMC stocks amid rising crude, busy election calendar ahead? And Google searches generative AI experience. What is it and how it works? India's gross tax revenue has registered a mere 3% growth in the first quarter of the ongoing financial year. It was 22% during the same period of the previous financial year. The corporation tax has registered a contraction of 14% and excise duty collection too has dipped. And with the elections drawing close, there are chances that revenue expenditure may see a spike. So, is there a reason to worry? Sanket Kaul and Abhijit Kumar read between the numbers.
The BJP-led central government will soon know if it still enjoys popularity. Polls are close, and to win the trust, experts believe it may loosen the purse strings. But how are the government finances stacked up? India's gross tax revenue, which consists of both direct and indirect taxes, reported a growth of just 2.8% to 8.9 trillion rupees between April and July of the ongoing financial year, when compared to the same period of the previous quarter. So, what will be the fiscal implication of the low gross tax collection growth?
Tax collection growth is going to tend to be slower than last year. The reason being that everything gets linked with the growth in GDP. Now, we have seen in the first quarter of the year that the growth in nominal GDP has been similar to that in real GDP, which really means that the GDP deflator has actually been very, very marginal. So when the denominator is low and taxes are based on a lower denominator, there would be a tendency for overall tax collections to grow at a slower rate. I think as long as we have negative growth in the WPI inflation, I think we will be seeing this kind of trend for some more months.
Meanwhile, net tax revenue contracted by 12.6% to 5.8 trillion rupees up to July, accounting for 25% of the 23.3 trillion rupees full year target. This could be due to the increased tax devolution to states during the period. Corporation tax collections, meanwhile, declined by 10% year-on-year for the period of April to July 2023. From 1.96 trillion rupees, it has come down to 1.76 trillion rupees. This is despite the fact that listed companies witnessed a healthy operating profit growth of over 30% between the period of April to May 2023. The budget had projected a rise in corporation tax of 10.5%, but in the first quarter there is a contraction of 14%. During August, the tax collected by the centre and the states and the revenue from imports and interstate sales moderated over the previous month. GST collection in August grew 11% to 1.59 trillion rupees year-on-year, but it was less than the 1.65 trillion rupees GST collection in July, while in June it was 1.61 trillion rupees. Economists attributed the moderation in collection figures to the muted growth in integrated GST and cess on imports. However, in June and July, imports fell on an annual basis. Personal income tax collection grew by 11% in the first quarter year-on-year, but it is still lower than the first quarter of last year, which was 40%. But there was some relief too. The government achieved 51% of the budgeted non-tax revenue target in the first quarter, thanks to surplus transfer of 87,000 crore rupees by the RBI. So, is softness in tax collection a cause for worry?
It is certainly a cause for concern, especially there's so much of expenditure lined up in the rest of the year. So any decline in the tax collections compared to the tax forecasted in the budget will certainly force the government to rework the expenditure plans. And this year, being that government is the only active institution, while the private sector is still lagging. I think the growth depends on how we succeed in collecting the taxes in the current year.
The capital expenditure of the central government grew by more than 50% year-on-year to 3.1 trillion rupees during April to July 2023. The figure was 2.08 trillion rupees for April to July FY 2022. Fiscal deficit widened in the first quarter to 25%, up from 22% last year due to subdued tax revenue collection and increased capex. The slump in finances is being attributed to weak July figures, which reported a deficit of 1.54 trillion rupees, whereas in the same period the previous financial year there was a surplus of 11,000 crore rupees. So, how can the government meet this challenge?
Going forward, the revenue mobilization will increase because we are expecting a better growth. But at the same time, there are one area where government might want to work a little more is the disinvestment targets. In fact, the non-tax collection side is something that they can focus a little more, and especially there are some pending disinvestment plans and that can be speeded up. My own expectation is that whatever the indication that is coming from the tax collection, indirect taxes, we are doing much better than what is budgeted. Even if there is a decline, I think the government should focus more on the non-tax side. And if you look at many of the public sector, profits, the indication is that the public sector profits are going to be much more than what the budget has assumed.
But as the polls are approaching, the government is unlikely to bite the disinvestment bullet. The central government has incurred expenditure of 1.4 trillion rupees in the period of April to July 2023 on major subsidies, namely food, fertilizer and urea subsidies. The major subsidies bill was 1.0 trillion rupees for the same period last year. The government, according to a Reuters report, will have to spend an additional 4,000 crore rupees for the recently announced cooking gas subsidy, in addition to over 7,600 crore rupees it has budgeted for the current fiscal year. Clearly, the government will have to do a tightrope walk, driest August in a century, and upcoming polls will test the government's resolve to keep the country on the growth path.
Weathering challenges, India continues to march towards prosperity. But it is also paying a price for this. A recent report claimed that air pollution cuts the lives of Delhiites short by about 12 years. PM 2.5 levels in 2021 was found to be 25 times the WHO recommended level. And the air turns worse during the winter season, which is just around the corner. So how should India address this elephant in the room? Ayush Mishra finds out.
Look at India. It's filthy. The air is filthy.
That was the then US President Donald Trump at the presidential debate in 2020, describing India's air quality filthy, along with China and Russia. While it was seen as an embarrassment for the government, the provocation was not far from reality. Air pollution is a silent killer, and it has been a persistent concern in India for over 2 decades now. India is the world's second most polluted country, where fine particulate air pollution shortens an average Indian's life expectancy by 5.3 years, according to the Air Quality Life Index Report 2023 by the University of Chicago.
About close to 70% of Indians live in regions where air quality is below India's own air quality standard. And to keep this in mind, India's air quality standard is actually a little more lax compared to global standards. So already, even after having a lax standard, 70% of Indians are living in places that don't have that quality of air. So I think that's a very concerning fact. And of course, the other being that, about 5 to 12 years of life expectancy are lost. But to keep this in mind, it does not mean that old people are dying sooner. It means that young people are becoming older.
The most polluted region of India is the Northern Plains, home to more than 500 million people, and some areas fare much worse than the national average. Air pollution in the national capital is costing 11.9 years of the residents' life, according to the Air Quality Life Index report of 2023. How can we fix the air pollution problem?
If we have to clean up the air, we need massive energy transition. We need clean fuel in all sectors, industry, power plant, vehicles, even household fuel. Similarly, we need massive circularity so that the waste management is done in a way that that the waste does not accumulate in the open, or you do not have landfill sites that can catch fire. And then you need massive mobility transition so that the maximum travel trips daily are carried by public transport or walking or cycling, and we can reduce dependence on personal vehicles massively. If you really need to clean up the air, you need regional action because pollution does not follow administrative boundary of a city. It blows between boundaries.
Roy Chaudhary believes Indian policymakers should also emphasize on the stringency of the action taken. India can look to Beijing to understand how it tackled the problem of air pollution. The city transitioned to cleaner fuels across the provinces around Beijing, followed by stringent compliance and monitoring over a period of time. The Indian government, on its part, has also initiated measures like the National Clean Air Programme to combat air pollution. It aims to improve air quality in 131 cities, but there is still much work to be done. Achieving tangible results will require greater investment in sustainable infrastructure and continued efforts to reduce industrial emissions. Navneet Vaibhav of Shardul Amarchand Mangaldas points out the need for cost-effective technological innovations, adoption of solar energy, and greater awareness among stakeholders to this end.
Our collective responsibility. We are 1.4 billion people. So this is something which is kind of, the responsibility for each of us. And this will not happen overnight. But then the government also has to ensure that they kind of facilitate this behavioral change.
Meanwhile, global pollution has been declining since 2013, despite the increase in particulate pollution in certain geographies. That's because of the successful efforts to reduce pollution by some countries. Is there a lesson to learn from there? Deloitte's Shailesh Tyagi hints at a solution from his personal experience.
Based on my first-hand experience, in Sydney, the Sydney city and the famous George Street, if you go there and see, in the past, the whole thing was very congested with taxis, cars, and buses, right? PP cars. Everyone is trying to go to the office, reach office. But what the city of Sydney did, they came up with a tram system. So no cars, no buses allowed. Everyone who comes to the office will get alternate routes to their offices, right? But the main street, only trams, plus a wider area to walk, great benches to rest, trees. And that has really changed the pollution levels right in the CBD. Otherwise, you could smell the pollution. You can smell the pollution, not anymore. So those are some of the stuff being done in London, and other parts of the world.
As an emerging economy, India is at the cusp of sizable growth, as the country is poised for a significant expansion in infrastructure, resource and energy consumption. Air pollution could be an unavoidable byproduct. How can India grow its economy through stronger climate action?
When countries grow, when they reach a higher level of per capita incomes, when they're able to grow their economies, they're actually able to deal with environmental degradation even better, because they have the kind of resources needed to make those transitions towards cleaner ways of doing things. So for example, take Germany. Germany now is obviously a very rich country, and it is a manufacturing powerhouse. Germany, closer to the World War days, when they had just come out of that time, they were not as prosperous as they are today, obviously. Their environmental situation was truly terrible. Their rivers would have black filth flowing on it. Take today, they are a manufacturing powerhouse. All the biggest equipments, machinery, cars come from Germany, and still, their rivers are crystal clear. Their air is pure.
India sure has a daunting task ahead to address its air pollution crisis. But with concerted efforts from all stakeholders and lessons learned from other nations, we could clear up our horizons and breathe easy.
Notwithstanding concerns around pollution, there is no stopping global growth. A continued surge in global crude oil prices has sent stocks of oil marketing companies in a downtrend recently. The upcoming election season is also keeping Dalal Street worried. So what should investors do? Harshita Singh brings you the answers in our next report.
Robust June quarter earnings failed to lift shares of state-run oil marketing companies or OMCs in the past month. Shares of HPCL, BPCL and Indian Oil have shed 9 to 11% since their respective earnings announcements between July 26 to August 4. In comparison, the BSE Sensex and the Oil and Gas Index are down 1% and 3% respectively. The weakness comes amid a continued rise in global crude prices that topped 9-month highs of $88.7 a barrel on Monday. A busy election calendar ahead that may see the government keep a lid on prices of petrol and diesel is also a dampener, analysts say.
The government has introduced in a way a subsidy on the LPG portion, which tells you that probably as we go ahead, the government will start to introduce more and more subsidies into essentially the petroleum products that are retailed, and that is not necessarily viewed positively by the markets. There is any change in the duty structure per se, that will necessarily have to be passed on by the oil companies. So it doesn't really alter the profitability metric for the oil companies. What could potentially be damaging is if some portion of that subsidy is being made to be borne by the oil companies, that could potentially hurt them.
Besides, the higher crude prices in recent months have again begun to erode the marketing margins of OMCs. Given this, analysts at Prabhudas Leeladhar expect OMC's marketing margin to normalize to Rs 3 to 3.5 per litre given the upcoming elections and uncertain crude prices. Thus, the stocks are unlikely to see any respite in the near term.
From a tactical point of view and from a portfolio point of view, it is advisable that one remains a little underweight on the oil sector.
Long-term investors, however, can still remain invested given the comfort of strong refining margins and low valuations, experts note.
OMCs over a period of time tend to recover their marketing margins. If we look at the business in totality, the refining segment profits are significantly high, and to an extent they can make up for the weakness in the marketing segment.
Bansal suggests that apart from short-term events, investors should consider strength in the refining cycle, deleveraging of balance sheets and attractive valuations before taking an investment call on OMCs. Today, on September 5, the Dalal Street action will remain stock-specific. The services PMI data for August will also be on the radar.
He's making plans for an early retirement. Business Standard.
Moving on, the future of Google is here. The company recently announced that it was opening its artificial intelligence powered search as an experimental feature in India. Called Search Generative Experience or SGE, it adds a layer of generative AI powered experiences on Google search. So what is it and how does it work? Shivam explains.
It is a new tool in Google Search powered by generative AI to enhance the user's experience by providing relevant information upfront on the search page. instead of showing links of multiple websites that may have information related to search queries and keywords. It will offer an AI-powered overview of key information to consider along with relevant links that point to the source of information. Since it is open for testing in India, Google has added support for Hindi and English languages. It has also integrated its text-to-speech feature, which would allow users to listen to the responses generated as search results. The SGE is a generative AI-powered version of Google Search. To know how it works, it is important to understand the fundamentals of Google Search. Google Search shows results in the form of links to web pages that may or may not have relevant information related to user-generated keywords and queries. In SGE, the relevant information from those links is compiled, organized, and shown upfront. Besides, it provides links to show the source of information and places photo results towards the end of the information to amplify the visual experience. SGE also brings the benefits of contextual information, which is not possible with the current model of Google Search since it considers each search query as a new command. This essentially means that you can ask follow-up questions or queries, and Google's SGE would carry over the context from question to question. The SGE experiment is available to opted-in users on Chrome desktop from August 31st. It will be rolled out on the Google app for Android and iOS over the coming week.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
But since SGE relies on large language model based experiences, the information snapshot might include misrepresented facts or inaccurate identifiers. Well, that's all for today. For more news and analysis, please log in to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.